Your mortgage payment jumped $1,185 a month, and nobody sent an explanation. Not your lender, not your bank. The Fed just kept saying 25 basis points, and somehow that was the entire story. 1 basis point is 1/100th of 1%. Think of percent like a dollar, then a basis point is 1 penny. 100 pennies make a dollar. 100 basis points make 1%. Why do they not just say 1/4%? Because when trillions of dollars move on every word, you need precision. Basis points remove all the rounding. 25 means 25, no debate. From March 2022 to July 2023, the Fed raised rates 525 basis points in just 28 months. 11 hikes in a row. That is the fastest rate tightening cycle in 40 years. Here is what that looked like in real time. Near zero through 2021, then straight up starting March 2022, 25 points at a time, then 75 at once. By July 2023, the rate hit 5.5%, a level not seen since 2000. Now here is what nobody connects for you. Every one of those basis points had a direct path into your monthly bills. But the damage was not equal. It scaled with exactly how much debt you were carrying. The bigger your debt, the harder every basis point hits you. A 25-point cut on a $100,000 mortgage saves $250 a year. On a $400,000 mortgage, that same 25 points saves $1,000 a year, $83 every single. Mortgages took the biggest hit because a mortgage is the largest number most people ever borrow. And as the Fed kept hiking, every $100,000 of home loan added hundreds more to the monthly payment. At the 2021 low of 3%, a $400,000 home loan cost $1,686 a month. At the October 2023 peak of 7.79%, that exact same loan cost $2,871. That is $1,185 more every single month from 479 basis points. Credit cards absorb the same hikes. The average APR hit a record 21.51% in 2024, and the average cardholder is carrying $6,501 in debt. Combined, Americans pay roughly $240 billion a year in credit card interest alone. But here's the part most people missed while worrying about their mortgage. Basis points work both ways. When rates go up, borrowers lose, but savers can win if they actually move their money. In 2021, $10,000 in a savings account earned $25 a year. By 2023, that same deposit earned $525. 500 basis points. Same money. 21 times the interest. Here is the mistake most people make. 25 basis points sounds like noise, 1/4%. But 25 basis points on a $200,000 mortgage is $500 a year, and on $400,000 it is $1,000. And if you're carrying credit card debt at 21% APR, the math is the least forgiving. A $5,000 balance grows by over $1,000 in interest every single year. Pay only the minimum, and you will still be paying on that balance 17 years from now. Here is exactly what to do right now. 4 steps, and you can start all of them today. Step 1. Open your credit card app right now and find your APR under account details. Step 2. If that number is above 20%, search today for a 0% balance transfer card. Moving the balance stops the interest clock immediately. Step 3. Check your savings account rate right now. If it is below 4.5%, move to a high-yield account today. That one move earns $400 more per year on every $10,000 you have sitting there. Step 4. Next time the Fed announces a rate change, you now know exactly how to translate basis points into your real monthly cost. 1 basis point is 1 penny per dollar of interest rate. The Fed moved 525 of them, turning a $1,686 mortgage into a $2,871 payment and a $25 savings balance into $525. Same math running in 2 directions. Now you know how it works. If that finally clicked, subscribe. Every week we break down one money concept nobody taught you. In plain language, no jargon.